Robert Kiyosaki is the guy with the plan, the man with the plan, and we believe he has the most distinct understanding of the future, and he has a reputation for telling the truth regarding money and wealth. We want you to pay attention because we believe Robert Kiyosaki has the most precise outlook on the future. He asserts that what he believes has occurred over the past 10 years, and what he believes will occur in the upcoming years is that following the financial crisis, the central banks simply got together and printed and distributed all this liquidity, which continued for 6 to 7 or even 5 to 6 years. However, the United States ceased making the milkshake at the end of 2015 and the beginning of 2016, and we then began to raise the interest rates. A variety of additional considerations, including the increase in interest rates from 2016 to 2019, had a significant impact, but they weren't the only ones. And despite the fact that they have decreased significantly, our interest rates are still greater than those of Japan and Europe, both of which have negative rates. Together with these other variables, such as the existence of the global reserve currency system, the dollar payment system, the size of the U.S. military, and the depth of the capital markets, everything mentioned above serves as a straw that sucks up all the liquidity that the world is printing. No matter how you feel about the dollar, whether you love it or hate it, whether you believe it to be an excellent currency or a terrible one, the truth remains that it is the money that the world relies on. So even if you despise the dollar, you still need it to function internationally, whether you live in Argentina, Turkey, China, Brazil, or France. We now believe that many people would like to modify it, but they haven't as of yet. We believe that their attempts to do so have come far too late, which is what gives rise to the idea behind the dollar milkshake theory. Why don't people just flock to gold? One wonders when asked if they're printing so many dollars. If there are a lot of fiat or so-called fake dollars, then why doesn't gold rise to new heights? He believes that it depends on where you are and what currency you are denominated in. For example, gold in Argentine pesos and Turkish liras look great right now, and just about every other currency, aside from the dollar, is at or near its all-time high. The dollar is still a few $100s away from joining them. Yet, as you well know, many people view the gold and the dollar as rivals or the polar opposites of one another. He believes that they will eventually ascend together, but that gold will ultimately win in the conflict. Gold serves as the market's currency, which is the reason the market would choose gold as money if there were only open markets, no government interface in central banks, and legal tender laws. Nevertheless, despite our desire to live in a free market, we are unable to do so because governments all over the world, not just those in our country, prefer to be able to spend more money than they bring in. The world's governments do not wish to return to the gold standard since politicians are elected on the basis of their promises. Although the market may try to force it upon them, they will resist, and it is during the resistance that gold occasionally becomes somewhat tampered with. From his perspective, the fundamental distinctions between pre-corona and post-corona is how much the U.S. will contribute to future milkshake mixing. Prior to that, we might have sucked it in while the rest of the globe continued to shake it up significantly. They are now mixing it with them, but for a variety of reasons, the United States will be the main beneficiary of soaking up all the milkshake. All that liquidity that the rest of the world is using and that we are now producing or injecting into the market. He's stating precisely that money is being printed all over the world, but it will eventually migrate to the U.S. When capital enters the United States, it isn't sitting in cash. Instead, it is invested in companies that offer yields slightly higher than cash. For example, it might go into Coca-Cola, IBM, Electronic Arts, or Microsoft, firms with some growth potential that also might pay dividends. If you're sitting in Argentina with some extra cash and you can invest in the dollar and the Argentinian peso drops by 10%, you know you just made 10%. But if you also invest in the Coca-Cola and Coca-Cola pays you 3 or 4% dividend, now you've made 13%, depending on the surface you're sitting on. Moreover, if Coca-Cola increases by 6%, your profit increased to 20%. Because of the dollars in your currency, you can no longer obtain the same thing if you live in the United States. Whether you like it or not, the dollar is the currency that is most in demand worldwide. And even if they're printing a lot of it, there is far more demand than there is supply. And the reason for it is that since much of the world's debt is also in dollars, it must be repaid in dollars. Everyone is aware of the United States' $24 to $23.5 trillion debt. Many people are unaware that the rest of the world also owes money in dollars. But this is true. If you look specifically at corporate debt and debt held by other shadow banking systems, the amount owed outside of the U.S. is likely between $25 and $30 trillion. Therefore, the demand for dollars is kind of through the roof when it comes to paying the interest on those dollar loans as well as repaying those dollar loans. Therefore, a brief question was posed. If his theory is true, the U.S. economy and all of our tangible assets in the country will grow. But what is the end result of it? In the end, the world economy will be completely destroyed by the dollar's strength since the monetary system was not intended for it to do so. It's going to be extremely difficult for the rest of the globe, which eventually won't be good for the U.S. either. There will eventually need to be another Bretton Woods-style conference or another Plaza Court-style meeting with the dollar strengthening despite the Fed's efforts to push it down. They'll have to either write off debts, issue a new currency, or somehow reset the system. When that occurs, the dollar will begin to devalue because people will no longer be flocking to buy dollars and travel to the United States. At that point, it might be a good idea to buy goods in other countries instead, such as Canada, Australia, Argentina, or Turkey. Since their assets will be highly discounted, the dollar will decline as capital departs the U.S. to make investments in those other countries. He claims that the lack of money flow and this COVID are increasing the already existing pressure on the world economy. It becomes considerably more difficult to obtain the necessary funds to pay the debt in dollars. So it's kind of speeding up the milkshake's downfall. But on the other hand, they're going to create all these dollars and all this currency. So when the COVID does go and money starts to flow again, suddenly there's a lot more money out there and it's flowing, which is a recipe for inflation. Nevertheless, after printing endless amounts of money, you first experience deflation before experiencing high levels of inflation as a result of the abundance of available liquidity. When questioned about his outlook for the Eurozone, like you have the English, you have the Japanese, what does he see in each of those? He predicts that the euro will either cease to exist altogether or cease to exist in its current form. Price-wise, it reaches at least 80. Hence, it will likely decrease by 25 to 30% from here. And their yen may rise to at least 150 or even 200. It's returning to its original location. In essence, the dollar will return to its all-time high while the rest of the world currencies, including the major ones, will experience a 50% decline. Hence, if you live in Japan, you may expect your daily expenses to increase at a rate equal to that of the euro. That is how he feels about gold. If you weren't investing in US dollars, you could probably back up the truck on gold right now. He stated Bitcoin is a fascinating currency and that he owns one when asked about its involvement in all of this. You should own some Bitcoin if you have the capacity and some speculative room in your portfolio. It won't be able to replace gold, and on top of that, it's a very asymmetric play. If it drops to $1,000, for example, things would be down. If it drops to $100,000 or $200,000, things would be up. In other words, it's an all-or-nothing proposition. As measured in US dollars, gold may still suffer in a situation where everyone is in need of dollars and you have to sell everything to obtain dollars. The entire world needs money, but nobody has yet indicated a desire for it outside of Japan, Europe, and Argentina. What are your thoughts on it? Let us know in the comments.